Hi guys, you are probably watching this because most of you are struggling with your win ratio. There can be many reasons for this. Generally, one of the most common is lack of transparency, confusion, and overtrading. There are many time frames, and many of them provide different signals to enter or exit a position. So if you want to act more precisely, you need to be patient and limit yourself preferably to a couple of time frames. I recommend daily, 4 hours and 15 minutes. What will daily and 4 hours serve us for? It will serve us to designate market inefficiencies and points of interest, plus determining at what the weekly and daily bias is. On the other hand, the 15-minute time frame will only serve us to execute our trade. That's all. So this serves us to analyze, and this serves us only for confirmation. In addition, as you may have heard in the past, that the market seeks balance. That is, it seeks to fill in the places of market inefficiency. You will find a lot of this on the lower time frames. There is much less of it on the daily chart because the areas of inefficiency are usually closed quite quickly there. Therefore, identifying this on the daily chart gives you a clear picture of the direction in which the price may be heading. With the direction already in place, you just need the POI. You can identify the POI on the daily chart and refine it on the 4-hour chart, on which you can also mark inefficiency price action. With these elements on your chart, you just wait for the price to arrive to POI and use the 15-minute time frame to confirm. So what does it look like on a live market? As you can see, here we have efficient price action because practically all the gaps are filled. Here we have inefficient, meaning that it is imbalanced. We can see that this gap practically immediately after making the second day is closed. Here we have another one. We see that the price pushed up and within a week closed every inefficiency, reacted to the daily POI and went up. And what happens here? Here we have exactly the same situation repeated. We break the structure and we form an inefficient price action. We just have imbalance here. And we have our daily POI. We can see that downward imbalance is already forming here as well. So what can we do once we have this determined? Once if everything is marked, we just wait until the price reaches this inefficient price action, fills it and enters our POI. So while waiting for that, we can change the time frame to the 4-hour and simply wait for the price tap to our POI. That's why you need patience. As we can see, price has pierced it all, liquidated here. For now, we don't have a breakout of this low. It looks more like a liquidity sweep. Here we can refine for ourselves our 4-hour POI. That is, this is our daily, this is our 4-hour. And now what? Here the price has gone down, filled in all the imbalance. Let's move to the daily, because here we can also see that there is an imbalance for now. Of course, the second imbalance will be confirmed with the next candle. And when we have the designated market inefficiency, we have filled market inefficiency, then we simply expect that the price will head upwards to fill it all. So when we have our POI set at that point, then we change to a 15-minute time frame, and just on the 15-minute time frame, we wait for the structure to break to get into position. So in this case, this is it. We did a market structure shift here with really huge momentum. That's what we are looking for. Price swept this low and liquidated all those who bought from the 4-hour zone. So now what do? We mark our 15-minute order block and we wait for the price to simply retrace to that area. Okay, the price is moving a little, moves away quite much, but as you can see, there is a lot of imbalance. That's why I'm feeling good about it. Once the price is getting close, you can simply set a buy order with TP set on a 15-minute structure. And now we're just waiting until price taps our entry and hits TP or SL, that's all. But additionally, price had a very large range. So there's one more thing you can use, but it's only recommended to use it if you have such a big range. When the price would do something like this, then don't use it because you can make a lot of mistakes. And what I mean by that is to use 1 minute for additional confirmation. That is what was on the 15-minute, we are simply looking for on the 1 minute time frame. Okay, and that's it. This confirmation is here. We broke the structure here and broke the structure here. So when this breakage occurred, it's only then that we can set, for example, our order at this level with a stop loss below 15-minute low, or we can make a buy stop when the price just gets there on its own, then the buy stop will be triggered. But as I said before, in this example, this is just an exception because the range of this movement was really huge. And once the price has rebounded so strongly, in many cases this low can still be swept a second time. So when there's such a probability that the low will be swept a second time, that's when we can use the 1 minute time frame for additional confirmation. But only use it when you start getting results on the daily, 4-hour and 15-minute time frames. So we just mainly wait for a 15-minute confirmation on our 4-hour POI. Simple, right? And after this confirmation, we simply mark 15-minute order block, set our trade, and wait for the price to come. And we see 4.5. 4.5 caught nicely. But as we have determined these market inefficiency on the daily and on the 4-hourly, let's use them. Here is one unmitigated area. One more, and there. Here we see that this 4-hour POI overlaps with the daily imbalance. So these things, as we are in a bullish trend, we can use for our targets. So this 15-minute structure can serve us as our first target, on which we take out, for example, 50, 60, 70% of the position, and that as we are in a bullish trend, we use these unmitigated POIs and market inefficiency as take profit levels, expecting price to fill and mitigate them. We can set the target here, we can set the target there. Setting the target on the daily high is not recommended. As if let's not exaggerate the target, let's not be greedy. So here we have the daily imbalance with the 4-hour order block, strong level I would say. So we can set our target here. There is strong probability that this zone gonna have a reaction for a such level. And we just wait for the price to reach designated level. Along with the current trend. Of course, if we want to hold our position to such daily targets, then, as you can see, the position can turn from a day trading position into quite a swing because it's already 10 days. This way, it is very likely that you will limit the number of trades daily or weekly. But with this limited number of trades will come increased win ratio because you will trade only to the most probable zones. The price finally fills all the imbalance on daily and impulsively reacting to it. Now it's today's chart, so we can see how this area hold the price. So go to live chart and backtest these concepts. Maybe this will help some of you and just brighten up the trading. Start yourselves with daily 4-hour, 15-minute intervals, and once you see what it's all about, get some more hours before charts, and then you can start look on different time frames, because you'll already have these patterns stuck in your head. Remember, trading is not a rat race, so slow down guys, and see you in next one.